Good morning, everyone. I'm Vince Lancy, and in today's market rundown, we will give you an fuck you. Let me start over. Good morning, I'm Vince Lancy. Today, we will do a BRICS summit update, and it's getting a little bit spicy over there, and examine JPM's warnings of gold's overbought status. And in doing so, in our analysis of that content, we stumble upon evidence that the bullion banks are overextended in their short positions. We'll discuss that more in premium. But first, let's look at the markets. While we're doing that, you can take a look at what's going on in Nvidia, which is the highlight of yesterday's activity. The dollar is 101.20, up 17. 10-year yields are 383, flat. The S&P 500 is up 31 at 56.07. The VIX is 16, down a percentage point. Gold is 25.20, up $17. Silver is 29.50, up 38 cents. Those are very nice, very healthy bounces for markets that were decimated yesterday. Decimated is the wrong word to use. Those are very healthy bounces and are a sign that they may be overbought, but there are shorts that need to buy. Copper is down a little bit less than a tenth of a penny at 417.40. Gold silver is slightly lower at 85.44. WTI is up 63 cents at 76.01. Natural gas 196, down almost 2 cents. Bitcoin 60,000 is the new home, up 1,000 points. Ethereum 25.59, up 31 points. Lagging higher and leading lower, Ethereum. Palladium and platinum. Palladium 956, up 17, and platinum 940, up 11. Grains are mixed. Soybean is pretty strong, up 11 cents at 10.09. Corn is trailing it, up a penny at 3.78, and it all comes at the expense of wheat, which is not on your screen, down 2.5 cents at 5.36. Okay. There are a lot of news items coming out specifically on the BRICS and the things that are of interest to us as precious metals people and commodities people and geopolitical people. So we're going to start devoting some of this to that news itself. The news section will become more about things that we're interested in, at least until the election. So let's see how that works out. All right. The homepage. Front and center, Tom Luongo interviewed, well, it was more like a discussion. Tom hosted a discussion with me and newcomer to his show, but not newcomer in the precious metals community, Eric Young. Eric is known as King Kong on Twitter. Now, Eric is outspoken, very sharp, and has one foot in the West and one foot in the East. I think he resides in Hong Kong, I'm not sure. But he's very familiar with the mainland of China, and he's very familiar with the United States mindsets and our investment biases. He shed some, I think, important light on Chinese demand, what it is, how it's evolving, and what it is not in terms of being overbought or oversaturated. And I think this is a very good program to listen to. Of course, I chime in, and Tom runs the show, and these are always great conversations. And Eric is a welcome addition. So we recommend that you watch that if you're a fan of these type of things. Here's a story that came out today that we wrote. The BRICS 2024, 126 nations eyeing US dollar exit. We're going to discuss that. There's a compendium of stories from yesterday. There's Asian war that could be happening as well. Also, India begins negotiating with China and Russia on M-Bridge unit weightings. We'll discuss that as well today. Let's get right to the main topic. JP Morgan put out a report on the 22nd that looks closely at gold's current investment situation in the context of other markets. So reading off of my own screen here, this is the current situation in gold. It is overbought. It is a crowded long trade, yet no one is going to sell it short. That's our opinion. And something new, there are likely options shenanigans afoot. This is an early look at what we think is going on there. But anyway, there's a picture of the report itself. We have broken out all the gold content, and we have broken it down and analyzed it for you with many charts. Here's a little bit more on that. Being overbought is not new for gold since December 4th, and so we are not worried about that with the BRICS summit and presidential election coming. These types of indicators, the ones in the JPM report, are something to worry about afterwards, however, and as such, they warrant closer inspection, which we gladly do at bottom. Obviously, this was written by me because there's typos in it. So there's one of the charts, too many futures longs, but few ETF buyers. JPM notes that speculative investors' positions across commodity futures look oversold in Brent, neutral in copper, and overbought in gold. When you hear copper, think silver, right? So again, we break out and break down the information behind the statements, highlighted and discuss the potential risks associated with their observation. That's at the bottom of this report. We're also going to stay with us at the end. We'll make a quick comment on the new information that we just got. Bottom line there, if you're trying to get to this, gold is overbought in the short term on the future side. And so it's susceptible to the downside. That's what traditional analysis tells you. And it's not wrong. The thing is, gold's been here many times since October 7th, and more obviously to me, since December 4th. It gets overbought. The open interest comes off, the market goes sideways. So we are overbought. The open interest could be coming off and the market goes sideways. I don't see that yet, but overbought does not mean bearish. Overbought means a pause. But once the events that are going to trigger more buying are over, meaning the BRICS summit and the election, well, then you could see the overboughtness really begin to weigh on the market, at least in the short term. Anyway, so let's move on to the next topic. That we have that at the bottom. There are two stories. There's going to be a lot more of these as the summit approaches. BRICS 2024, there are 126 nations eyeing a US dollar exit. That's how many nations are going to be guests at the BRICS summit. Around 126 nations are set to attend the BRICS Municipal Conference, showing increasing interest in joining the bloc and moving away from reliance on the US dollar. This growing momentum among developing countries reflects a broader ambition to strengthen local currencies and diminish the dominance of the US dollar in global trade. That's a story that we wrote. The link is there. That's free to all. BRICS. India begins negotiating with China. This is a story we saw in, I forget, it was the Hindustan Business Times, but we cited them on that. India raises the question, this is us talking, if they will use a centralized notional currency for commodity trade, how will it be weighted relative to national money? And will it also obviate our ability to use national bilateral currency deals? In asking those questions, India is pushing back against the potential of a China and Russia dominated market. The concern, which has been to this point very well addressed by China and Russia to a lesser extent, it's not really their place to say, is that the yuan will not replace the dollar. And there are many ways, many holes that could happen. One is the yuan is too heavily weighted in the BRICS basket. Two is the price of gold could be manipulated by China lower or higher, thereby hurting weaker players, et cetera, et cetera. They've addressed these things in actually very good faith, I think. But India is now saying, will using the basket remove our ability to go bilaterally? Do we retain the choice? And that's has to be something they've already discussed. But the fact that India is going public with it means it's getting a little bit spicy. Now, I don't know how it'll be solved, but knowing that China's involved, it'll probably be solved behind the scenes. They're very demure about how they handle things. Anyway, these two stories, we have on our site. The links are right there as well. Feel free to go to them. Today, data is trade inventories, home sales at 3:30 p.m. Atlanta Fed President Raphael Bostic speech. We don't care about that. As I said, you care about home sales. I want to talk about before going to the little premium comment at the bottom. I would like to talk about there's the premium section. I'd like to talk about a couple things. Nvidia's earnings came out strong. We have that in the report as well. But the stock sold off. Now, the market's not even open yet. But let's assume that the stock market, that the Nvidia, let's assume that everything that you're looking at on the screen remains as it is. Nvidia is weaker. The stock market in general is broader and VIX is down. This is a sign, if you're an equity person, you're a bull, of a broadening bull market, taking your money out of Nvidia and putting it in something else. It's that simple. Another way to interpret it is, well, the dollar is stronger, gold is stronger. This could be the market beginning to crack in a stagflationary way, especially with oil up. All right, so bears are going to look at this and say Nvidia is due for a sell-off even more, and the stock market is being held up by Nvidia, and it's all legitimate concerns. But wait for the day to happen, right? When earnings are released at the end of a trading day, the weekends move first. Doesn't mean they're wrong or right. It just means that they move first, right? So what happens the rest of the day? Well, we're going to find out. When another comment about the bears, it may sound like the way I'm phrasing it that I think the bears are getting ahead of themselves. I'm not. You got Buffett selling Apple, right? And then he announces selling Bank of America. He probably sold more Apple, right? You've got other significant players selling large stakes in companies. So the rich are taking profits. Make of it what you will. All right, so let's do a little bit of gold here. Gold, pop some of those lines up. All right, so that yellow line, that's essentially the Michael Oliver line. And although I have it up there on a daily, you should look at it more on a weekly or a monthly. We're well above that. Focusing on a little bit more tighter time frame and hiding those lines, it's actually very simple. If you imagine Michael's line still there, what you have is you have buying in here. This is probably macro discretionary buying. Why? Because they bought it very technically. Central banks don't go, oh, I'll buy it when it gets to this high. Macro discretionary guys do that. This is macro discretionary piling in. This is probably CTAs getting out, and this is someone buying. Could it be macro discretionary? It could be, but I'm telling you, it's at least partially bullion banks covering shorts. Bullion banks are covering shorts now. I'm saying it like it's a fact. It's just conjecture, but I'm willing to bet on it. So if this market gets below here, you want to see how gutsy the macro discretionary guys are. Will they buy it here, or will they begin to sell it here? If the market gets above here, this was the Bank of International Settlements likely keeping a lid on it. If it gets above here, it should run, which is an easy thing to say. But I want you to think like this. Bank of International Settlements caps, market trades in a range. Unless there's an event, market trades in a range, open interest comes in, market rallies again, and open interest gets added to it. Something that we've shown going back for months. Ready? Here's your quick review. December, capped range rally. Capped, you can't see that one, but it happened there. Range rally. That one, it almost got away from them. Capped range, right? It's actually this whole thing here. This is the thing that Michael focused on, Michael Oliver. This whole, you could say that this is a cap too. It probably is, but this is where they said no more, right? You shall not pass. And the market ranged for here, and then it rallied. Now, I don't know that this is a cap, but it did stop. This is a cap. So I'm going to call this a cap. I did before. Cap, range, rally, cap, range. Notice this. Long and narrow. Forget that. Shorter and less narrow. Shorter and even less narrow, and really tiny. If the market gets above here in this little thing here, I would be shocked. That would be a sign of the market getting away from them. Anyway, silver. Silver's playing catch up. What can I say? I mean, the silver market is in the process of offloading the remaining above ground supply that's not allocated, meaning all the silver being bought now in the world is industrial, not investment. All the silver being bought on exchange is investment or trading, or gold's too expensive, I'll buy some silver. Okay. Right now, the industrial demand is being handled from various ways. Scrap, concentrate being refined, and investment coins being remelted for industrial demand. When that's done, if they can't get extra silver to put in the vaults, you see silver's going in the vault right now. If they can't get silver to go into the vaults, then silver's going to rally again. Keep your eye on China. China has become an importer again. All right. Stay with us for the premium section, and we're going to start that now. All right, guys, let me take a quick drink here. Premium people, this was sent to founders, including the report a couple days ago. So that's an upsell. And they got all this information. There are things that they get that you don't, but there are no things in metals that they get that you don't. Okay, sometimes I'll give it to them a little bit early because I have other things on my plate and I want to get it out there, and then I can refine it and get it to premium. This is an example of that. All right, so the bottom line for this report is JPM is not recommending one thing or the other. They are just saying professionally, gold is overbought. So I'll just go through the charts. Futures are overbought in gold. ETFs are just turning bullish. Now, I wouldn't call this a confirmation yet, but this is the market. Macro discretionary is long. And if you're bullish on a short-term basis, nothing to do with the BRICS, you're looking at the ETF buying to come in. That'll represent the U.S. demand that will come in because the Fed is easing. If the Fed doesn't ease, this is not going to turn up. And this will turn down. But how much it turns down will depend on China. So once the Fed news comes out, they ease or don't ease, then it's let's look overseas again. Next chart. Okay, this is the chart that that got me interested in what the hell is going on with the bullion banks. Okay, so this is a JP Morgan chart, and it's kind of small in here, but what you're looking at there is managed money longs in gold futures. And so as a percentage of the open interest. Now, right now, it's at a very high level, not all-time highs, but there it is at Gaza, there it is at Ukraine, okay? There it is at COVID, and I still haven't looked these two dates up yet. Again, I'm going to look them up, but there's a reason for these two dates to be where they are. Let's see, 2017, 2018, maybe Brexit. I'll have to look it up, okay? But the point is this. Spec futures are at all-time highs as a percentage of open interest. There's no argument there. That's overbought. That's overbought. The question that it made me think is, well, where the hell are the bullion banks if these guys are so short? What is their number one position? Are they shorter than they've ever been? Number two, are they shorter than they've ever been relative to producers? Where are the producers in all this? And you know that for about 2 years almost, I've been saying that producers are not hedging like they used to. And we've been proven right about that, and that's where the manifestation comes in. Here's a momentum chart, right? So every time gold makes a new high, the momentum is weaker. What is a measure of momentum? Well, it's a short-term measure. So it's not Michael Oliver's measure. He's looking at long-term momentum. Short-term, this is the market being bought. It's getting higher on weakening momentum. momentum can turn in a heartbeat. This is not something to worry about. This is interesting. You won't see this anywhere else, but this is JP Morgan looking at what's the title of this section? Let me think about this. The title of this section is turnover, right? So basically, it's the open interest is 100,000 contracts. What's the turnover? How many times does it turn over? So today, 33,000 contracts traded. That's 1/3, 30%. So turnover is very important when you're measuring many things. But the thing that's easiest to understand is that the bigger the turnover, the more interest in the market. Maybe good interest, maybe bad interest, but the more interest in the market. So it's kind of like you could say as turnover increases, frothiness increases, right? As turnover decreases, interest is in decline. And you can look at this many different ways. But the red rectangle I have there, gold, its year-over-year change in turnover is 25% higher. Oil is down 13%. That's the macro discretionary. The macro discretionary has said oil isn't working for us anymore. Fuck the oil. And by the way, that means it's manipulated. Trust me. They are like, it's capped. We can't get in the way of it. Let's put our money in gold. So I'm not saying that they're taking the money out of oil and putting it in gold. I'm saying they saw gold get attractive. They only have a limited amount of money. They start putting their money in gold, and they went, you know what? Oil really sucks. Let's put more money in gold. They allocate out of oil into gold. Now, that could change, but these numbers here, these are not quick changing things, okay? Oil is in decline as an investable, tradable market for macro discretionary. Doesn't mean it's not going to go up to infinity. It just means the macro funds will probably not be involved. They'll be involved in gold. Copper up 30%. Now, copper up 30%, that's a bigger market. And I would say that that's China, meaning China has created more interest. Macro discretionary is getting involved in it, which if you're looking at copper, you're thinking about silver. They don't have the silver number here, but assume that the silver number is similar to the gold number, 25%. I'd like it to be actually higher than copper because that means it's still being kept a lid on. Anyway, some other time. Bitcoin, the comparisons to Bitcoin and gold, ignore them right now. They don't compare at all. Bitcoin is being traded like a technology company, and it's getting the gold treatment. Bitcoin is just getting the gold treatment. Like, it's like you're not allowed to rally, they're letting gold, like conspiratorially speaking, China wants the price of gold higher. India, everybody over in the East wants the price of gold higher. We're giving it to them. We're letting it happen as long as it's orderly. We're not going to let it happen to Bitcoin. We're not going to let it happen to oil. It's kind of like there are two major commodities that give people concern about dollar strength: oil and gold. And when we let oil run, thinking of the government, when we let oil run and the market take care of it, gold doesn't rally. And now we're going to say, all right, China wants this. We're negotiating with China. Fine, we'll let the price of gold go up, but not oil. So it's kind of like you can't let them have, if both of these markets were to rally, the dollar would get decimated. Inflation would get destroyed. And I think that's what's going on. Anyway, why am I saying all that? Because Bitcoin is like the new pariah. For now, anyway. Okay, gold as a safe currency. This is very esoteric, but there's a meta point here. They look at gold as a safe, is it a safe or risky currency? And I've seen this before, but not a lot recently. And this is going to become more important because when you're discussing gold as a safe currency, what you're really doing euphemistically is you're discussing gold as a replacement for treasuries. See, if you're buying U.S. Treasuries as a safe haven, you're buying U.S. Treasuries because it throws off dollars. You need dollars, sell your Treasury, borrow against your Treasury, okay? It pays off coupons in dollars. This is about Treasuries versus gold, not currencies that are weak versus currencies that are strong, because all of the weak currencies are going to use gold as well as U.S. bonds. All right. This here, I'm running a little bit late. What is this? Oh, this is a volatility indicator. Bottom line, gold volatility is very overbought, but as long as the market volatility keeps realizing the implied, it will continue to remain bid. It is not overbought yet. It becomes overbought when the implied volatility is high and the break-evens drop. So right now it's not overbought. It could be overbought in a heartbeat, but the key to that is it's a sign of a market that may be about to get toppy. It's not a reason to be, I'm bullish because the volatility is justifying itself. No, it's a sign to be careful. What is this? Skew. Okay. Gold skew is high and decreasing. This is an indication that speculators are not buying as much as they usually do, which is an indication that macro discretionary is less committed to gold options than it has been. It's not definitive at all. That's the currency thing again. Here's the chart that I'm working on now. If you're a watcher of the Sunday analysis, there's a chart that Randall Blava, he's a founder, puts together, and I asked him very kindly, and he's very, well, I don't know if I was very kind about it, but he's very kind to create one going back with all the data he has. And why did I ask him this? Because there's something screwy going on. I'll give you a couple dots. Dot number one, Chris Marcus. We have a little bit of a gotcha thing. He texts me and he says, hey, Vince, did you know this? And I'll say yes. And I'll say, oh, you got me. And then I'll text him something. I'll say, did you know this? I'll say, yeah, I knew that. Got me. Yesterday, he texts me. He goes, did you know that the bank short swap desks are the shortest they've ever been? And I said, no. And then he showed me the data and he got me. Like, I was like, oh shit, I've forgotten that. Like, I never really paid attention to it because I'm so in the micro. And then he disclosed also that Rafi had pointed it out to him, someone who does shows on Arcadia Economics. Anyway, so after he had said that, I went back and looked at the other data. I said, oh shit, this is pretty significant. So I'm going to be doing more on this, but here's the bottom line. Here's what I want to tell you. If the bank bullion dealers are more short swaps than they've ever been, but the open interest is not anywhere close to the highs of all time, what's changed? Several things have changed. One of them is the mix of participants on the selling side has changed significantly to the detriment of the bullion banks. And number two, the market has grown. We'll get into more of that later on. Geez, it's 8:10 now. I got to get going. All right. Catch you guys later.